We like things like Ethereum, we do like Solana, we do like Avalanche, and you can go down a little bit lower on the capitalization scale. Bitcoin's the king. It is the dominant token. It is a better form of gold or digital property. Now, as Michael Saylor calls it. So I do think it will be the best, but the law of large numbers comes in. I think it could go up 10x from here easily over the next decade, but I think some of the smaller projects will go up orders of magnitude more, just the law of small numbers.
Mark Yusko serves as the founder and chief investment officer of Morgan Creek Capital Management, and additionally holds the role of managing partner at Morgan Creek Digital, the segment of the investment advisory firm focusing on transformative technologies. These technologies encompass various fields such as artificial intelligence, blockchain technology, computing infrastructure, and big data, collectively referred to as the ABCDs of disruptive and emerging innovation. While Yusko has long been bullish on Bitcoin since his introduction to the cryptocurrency years ago, he does not align himself solely with Bitcoin maximalism. He sees potential in numerous other crypto projects, which, alongside Bitcoin, are laying the groundwork for what he terms the truth system, constituting a new financial paradigm. According to Yusko, the traditional financial system operates on the principle of trust, urging individuals to rely on powerful intermediaries whose motivations may not always align with the public's interests. In contrast, the truth system of blockchain technology offers transparency and immutability, eliminating the need for blind trust as every transaction is recorded on an immutable ledger. In a recent CNBC interview, Yusko shared his price projections for Bitcoin and other cryptocurrencies, suggesting that Bitcoin could reach $150,000 next year at the peak of the current cycle. However, Yusko expresses even greater optimism for smaller cryptocurrencies, which he believes will outperform Bitcoin in the coming years.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
We look at the fair value today from the Metcalfe's Law model. That gives us round numbers around 50,000. The halving occurs in 3 weeks. What a halving does, it cuts the block rewards, the amount of money that's given to the miners to secure the network. If those rewards were to get cut in half, as they do, many of the miners would struggle. So historically, what has happened, the price rises, the fair value rises. So that would push it at 100. But this time it's a little different in that instead of just block rewards, we get transaction fees because of ordinals and inscriptions. So let's say the fair value only goes to 75 this time. Then post-halving, you get a lot of interest in the asset, a lot of people FOMO in, and we normally go to about 2 times fair value in the cycle. So in the last cycle, fair value was 30. We got as high as 68, 69. This time, I think probably 2 times because there's less leverage. So that gets us to 150. The big move happens post-halving. So the halving occurs sometime between April 20th and April 21st, most likely. So once that occurs, then you start to get an increase in demand, right, from the ETFs and other people interested. But the supply of new coins goes from 900 a day to 450. Well, think about it. If there's more demand than supply, price has to rise. So the price starts to rise. It starts to become more exponential or parabolic toward the end of the year. And historically, about 9 months after the halving, so sometime toward Thanksgiving, Christmas, we see the peak in price before the next bear market.
What are other things out there, equity or other coin, that you're looking at that nobody's talking about?
You know, it is so hard because the regulatory regime has been pretty restrictive. I mean, there are the mining companies that secure the network. They've had a really good run, so the valuations are a little toppy, but we do like those businesses. There are component companies that make the machines that secure the network. AMD and NVIDIA have been a story, a proxy to play the crypto markets for about 6 or 7 years. But again, they're at valuation levels that are tough to stomach. There are a lot of really interesting products and new tokens in the private markets. That's where we traffic at Morgan Creek Digital. About 80% of what we invest in are private companies, and only about 20% are in the liquid tokens. But we like things like Ethereum, we do like Solana, we do like Avalanche, and you can go down a little bit lower on the capitalization scale. Bitcoin's the king. It is the dominant token. It is a better form of gold or digital property now, as Michael Saylor calls it. So I do think it will be the best, but the law of large numbers comes in. I think it could go up 10x from here easily over the next decade, but I think some of the smaller projects will go up orders of magnitude more, just the law of small numbers.
In the midst of a bullish market sentiment pervading the cryptocurrency sphere, Galaxy Digital CEO Mike Novogratz emphasizes the enduring significance of spot Bitcoin ETFs as a major catalyst for crypto asset prices. Novogratz foresees their impact resonating not only throughout 2024 but extending over the years ahead. Moreover, he remains notably bullish on crypto asset prices, driven in part by the increasingly ominous macroeconomic landscape. During an interview with Bloomberg Television, Novogratz highlights a concerning example: the staggering U.S. national debt, which currently surpasses $34.6 trillion. The acceleration in debt accumulation is stark, with the U.S. debt escalating by over $1.6 trillion in just over 6 months, hitting $33 trillion in September 2023. Given the apparent unsustainability of this trajectory, Novogratz predicts a growing number of investors will turn to Bitcoin as a hedge against economic instability. Clips from the interview further elaborate on his perspective.
Bitcoin has broadly doubled since November, so let's hold this in context, right? We had a $35,000, dollar price 5 months ago, and we're now 70,000, and so it's been a monster rally. That rally was mostly fueled by adoption, right? With the ETF, it made it very easy for people in the U.S. institutions and the wealth channel, most importantly, to access Bitcoin for the first time. What's happening at the same time this is happening in the U.S., we're launching ETFs or ETPs, with DWS in Europe. We've got a partnership with Itaú in Brazil, and you're seeing people around the world participating in the simpler form of Bitcoin, right? An easier access form. And so I think this is just starting. Like, what will happen to prices? Prices are going to consolidate for a while between 75 and maybe 62 or even 58. You could see a consolidation, but each 100 days our government's adding $1 trillion of debt. Right, we're at 34 trillion right now. We'll be at 35 trillion, and then 40 trillion. That story is so powerful. It makes it easy for salespeople, right, for registered investment advisors to tell their clients, put a couple percent of your net worth in Bitcoin, and you're seeing that happening. This is a process that's going to go for years, not for months. Listen, you could have bought a house in America in 2012 for $190,000, and today that number's about $400,000, right? And so when you print as many dollars as we're printing, forget what the headline inflation number looks at, because you have asset inflation that doesn't go into CPI. At times you have food inflation, and so you have lots of different inflations. The purchasing power of the underlying currency goes down. Right? Look how much silver a British pound gets you today. Certainly does not get you a pound of silver. The long-term history of governments is that they debase their currencies, and we're in that process. And we've got an election coming up between Biden and Trump, both who I think will expand the balance sheet. We're running 25% of GDP as a federal budget. That number should be 20. So we're 5% of GDP off of where a real good, tight government would be spending. And I just don't see that changing, right? Populism is taking over the world. It's a very scary world in that respect. But Trump is a populist and Biden is a populist. We don't have a centrist in the system. And so I'm really skeptical that we're going to have a Simpson-Bowles amendment or something to balance the budget or someone to cut spending. And until that happens, it's easy to sell Bitcoin.
Mike, just real quick, I think you told investors that work on Delaware was ongoing and a NASDAQ listing ongoing. Do you have any updates on both of those items?
Listen, what I told investors was for 2.5 years, we have been working diligently with the regulator, the SEC here, trying to get redomiciled to the U.S. and listed on the NASDAQ. There was a change of philosophy after Jay Clayton in the last administration left and Gary Gensler in the new administration came in. And just looking at the facts, no companies that do anything other than Bitcoin have made it through as public companies. And it's been frustrating. It feels very un-American, right? That we've got this one group of companies that got public, that have access to the capital markets, that have access to cheaper funding, and we're waiting on the sidelines still. I am optimistic that things will change. You know, there's an election coming up. No matter who wins the election, I think there'll be turnover at the regulators. I think Democrats are realizing that crypto is, you know, the American public is voting. They're voting that they really like Bitcoin, they like digital assets, and they like crypto.
In recent developments, Bitwise CIO Matt Hogan shares the same bullish sentiment as Novogratz regarding the spot Bitcoin ETFs. Hogan anticipates sustained demand through these ETFs for years to come. In a recent social media post, he observes a significant number of institutional investors yet to tap into Bitcoin ETFs, indicating a looming surge in demand. Hogan suggests that ETF flows will persist over the long term, citing disparities in adoption pace among financial advisors and national account platforms. He notes a shift in investor attitude toward Bitcoin, with a notable increase in allocation percentages. Hogan highlights a marked change in professional investors' perspective on Bitcoin, particularly since the launch of ETFs. Previously, the focus was on a conservative 1% allocation due to perceived downside risk. However, with ETFs mitigating this risk, investors are now considering larger allocations of 3% or more. Hogan's active engagement with investors underscores his optimism for the future of Bitcoin ETFs and their impact on crypto prices in the months and years ahead. Share your thoughts on these insights and their implications for Bitcoin and crypto prices in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.